welcome to another episode of the Real Estate Playbook. This is episode number 65. And this week's guest, we have Mark Hogrefe with SunPoint Home Loans. Mark, how you doing today?
Doing great. Thanks for having me.
Awesome, man. So let me ask you, Mark, we always like to start off with our guests. You're the first guest that we've had kind of not being a licensed realtor. Most have been real estate agents. You kind of coming from the mortgage industry. So some of the question dialogue will be a little bit different. But what kind of got you into the mortgage lending? What made you want to become a mortgage broker and kind of start originating loans?
Good question. So I've been in the business about 21 years and got out of college, was selling to other retail spaces. And I said, all right, I had a friend that was in the mortgage business and he was doing really well and he was helping home buyers and helping people refinance. So didn't know a whole lot much about the business. He brought me in and, there's a lot to learn. But you are helping people, and you're helping people make one of their biggest transactions they're ever going to make in their life. So since then, I've worked with a few different companies, went through housing turned down back in 2008 and 9, and decided in about 2015 to start my own branch. And then it transitioned into owning our own company. So I'm a co-owner of SunPoint Home Loans. It's a broker business in the Land O'Lakes area. Had that for about 6 years now. So from there, history, and work with great realtors and good partners like yourself. So just a good team if you have that built in place. And it's an industry. It's very rewarding because you can help people obtain home ownership and also can save money too as well. We do a lot of refinancing too as well. That's something that's a good part of our business. But primarily, we are purchase oriented, and it's something that I like helping clients, like challenging situations, overcoming scenarios that might be a little difficult, and it's a good industry to be in.
Awesome, man. So you're probably not seeing too many refis come through the door right
now. No. So those kind of changed last year. Obviously interest rates are up. I mean, that's not any news. It's clearly posted out there. So, we weren't strictly focused on refinance. We're always heavily partner with realtors, and we know that's just a better business to be in, but kind of more rewarding too as well because we can help people obtain home ownership.
Awesome, man. So, but obviously going to college, get into mortgages, what did you do exactly? I think you spoke to sales. What was it exactly you're doing prior to get into the mortgage business?
Yeah, that's a good question. So I was selling as a rep into Home Depot stores, so completely different than the mortgage business. Obviously sales oriented, but I was talking to store owners, managers, and selling some of our products in there. I liked it. I liked the sales aspect of it. Didn't like the fact that I was, kind of in the Home Depot environment where, I was, retail's a little tough sometimes. So, but after that, the mortgage industry kind of allowed me to use my finance background because I do have a degree in finance too as well. So I felt that was a little bit more rewarding.
Awesome, man. So obviously, I always say, regardless of what position you had at a company, there's always certain skills that you're going to acquire. What do you feel are some of the skills that you acquired previous at the sales job with Home Depot before becoming a mortgage lender that allowed you to have a higher level of success than most people kind of getting into the business?
Yeah, I mean, this business is a people business. I mean, it's not about the numbers, not about, making money. Obviously that comes if you're successful at what you do, but it's about helping, people. And that business was about doing relationships with the store managers of Home Depots and things like that. But now it's more relationships with my realtors, relationships with my clients. And if you take care of them, usually your business is going to be successful. I mean, our business model is have a client for life. I mean, we want to help somebody and they refer their friends and their relatives, and it's not just transactional based. So I learned that a long time ago in sales that, if you care about the person and you do a good job for them, they will come back. Give them a good deal too as well. They'll come back. And that's one thing I learned a long time ago in sales. And I think that works with pretty much any industry, in real estate, mortgages, any type of sales environment.
Yeah, to sum it up, so pretty much was cultivating those relationships, getting those communication skills, learning to talk to people, and then cultivating those relationships and constantly curating them where, in your words, a client for life.
Exactly. Yeah. And that's a great thing about, your shop. And I know that You guys have a lot of repeat business, good name too as well. So we kind of have the same type of model as we want to make sure we're taking care of clients, not just their first house or second house, if they need to refinance too as well. So they're always thinking about us.
Absolutely, man. So before getting the mortgage business, obviously, before anybody kind of gets into any, I guess, endeavor they're going to do, they probably kind of have a visualization of what it's going to look like or what it's going to be. What's one thing that prior to getting in the business you didn't expect or might have taken for granted?
Well, when I got in the mortgage business, didn't realize how complicated it could be. People think on the outside that it could be, it's say, how hard is it? My credit score, this too, but it's kind of fairly high level. There's a lot of guidelines involved too as well. I mean, barrier to entry is probably not that hard, but being very good at what you do is a little bit harder. Knowing, being better at your craft. Same thing with like real estate. I mean, there's a lot of agents out there, but the good agents are, the ones that are more successful, the ones that are more knowledge based, the more that learn their craft. Same thing with the mortgage industry too, as well, is the ones that really study and want to learn. They seem to do very, very well, and those are the ones that realtors want to work with too, as well. I mean, if they're referring a client over to a loan officer, they want to make sure that client's really taken care of. It's not going to fall apart. I mean, you got a transaction where you got buyers and sellers and realtors, a lot of people involved. They want to make sure it's a smooth transaction. So I would say just the complicated aspect of it, I mean, you kind of learn as you go. You do take your lumps, maybe in the first couple of years of the business, you have some deals that don't go as well and you learn from them. But, that's what kind of makes it good too, as well. It's like, it's has a little bit of knowledge based and stuff that you have to know and understand.
And a lot of that, obviously, you can get your guidelines through, your account executives, if you can speak to underwriters, things of that nature. But a lot of it comes through experience.
Comes from experience. Yeah, exactly. I mean, I worked under some good people, good managers in my career that helped me out and learned a lot. So, just like with any industry, I'm sure you have mentors and people that get you to the next level. I had that definitely. But we have like in our office, really open door, and we answer questions all the time. We're constantly learning, spreading information, having meetings about that too as well. So that's really important. And, I'm talking with a client right now, unfortunately, where, his deal's going south with another loan officer and he's seeing if we can save it. He's too far in, so he's kind of just taking his lumps. But at the end of the day, I guess it looked like something the loan officer could have saw on the get-go, but, it's just an inexperienced loan officer. And, these are big transactions. You're buying a house and you're moving your life. So, experience is very important. So, I would say just the knowledge-based portion of it's a little bit something that, I'm constantly learning too as well. But just the intro into the business, I didn't realize how much there was to learn. Yeah, absolutely. And you're doing it for, I think you said 21 years now? 21 years, yeah, time flies. I mean, I remember when I started, but yeah, it goes by quick,
So lots evolved in the mortgage industry over the past 21 years. What do you think are some of the biggest changes that you've been a part of?
Yeah, good question. So when I got in, it was kind of the wild, wild west. I mean, it was guidelines were kind of like questionable.
A lot of subprime loans.
Yeah, non-prime loans, which are, not ideal type loans. I mean, they actually exist today, but they're a little bit more structured than they were before. But, more regulation now. You do have to, be more knowledge based too. I mean, I think, loan officers that were in the business back in 2006 and 7, maybe didn't have any, weren't qualified to be in the business, I guess you could say. So there's more regulation now. And which is a good thing. It's all about the consumer. It's all about, protecting them, making sure that, they're getting a good loan, that they're going to be able to repay the loan too as well. So that's probably the biggest thing we've seen. Also, the way loan officers get paid changed too as well for the better. It used to be prior, loan officers can kind of get paid whatever they wanted, how much they wanted to charge, which really wasn't in the consumer's best interest. And now those are regulated. So, we're capped on what we can make, and, we have to show what we make, and the clients know. And It's easier for clients to shop so they can get the best possible deal. So that's all a good thing. It's helping consumers, making sure that they're getting the best deal because, getting a mortgage can be complicated. There's a lot involved. So, they're trying to make it so average homeowner that may not know a lot can still make sure that they're getting a good deal or can shop to make sure they can.
Yeah, and also too, and correct me if I'm wrong in this, but back in the day, you didn't have to be licensed. Now, regardless if you're working for a lender, obviously brokers had to be licensed, but you can go kind of work at a lender shop under somebody and not really have a license. But now they're doing more of an audit, making sure that you at least have that entry level certification.
Yeah, we have to be licensed. We have to have continuing education, and the licensing process is not very easy, or I guess easy to get around or to obtain. I mean, most people with a financial background will go through fine, but yes, there's more regulation and more licensing requirements now than there ever have been, and it's for a good reason. They want to make sure somebody that is in this business is honest and doesn't have a criminal background and fraud or anything like that. So these are good things that have came in place.
So obviously been doing it for a while here, and a lot of, like you said, have been dealing with a lot of changes. And I know like right now we hear a lot of agents kind of, their numbers are down and they're kind of getting nervous. And obviously we still have the cash transactions, which mortgage lenders don't. So I know mortgage lenders are feeling possible to kind of turn here in the marketplace, probably even a little bit sharper than an agent would. What's one thing that you and your organization are doing right now, Mark, where you might be doubling down on or trying something new to ensure that you're going to have the level of success that you're used to, when times are good?
That's a good question. I mean, we're getting back to basics, really focusing on the customer, making sure that, we're giving proposals to clients and giving different options, making sure they're getting the best possible deal too as well. We're even running promos right now. We're paying for appraisals. So that's something that we're running till the end of the year.
That's awesome.
So, little things that trying to get some of these buyers that, maybe questioning the marketplace right now, saying, hey, it's a good time to buy. But basically get back to basics in terms of going back to customer relationships too. Reaching out to past customers that we did loans for in the past and see how they're doing, things like that. That's something that I think the industry really needed. Over the last couple of years, 2020, 2021, COVID really did create a boom in the marketplace, which some people weren't, I wasn't expecting. It's hard to predict what was going to happen. And, home prices obviously increased and a lot of buyer demand too as well. So loans were easy to come by and refinances were strong too as well because interest rates are really low. Yep. So it was kind of like all hands on deck. And sometimes when that happens, you tend to be a little bit more transactional than you want to be because you're just servicing it. Getting back to the basics is really where anybody in this business should be kind of looking at their marketing, looking at, what are they doing for their clients? They really going above and beyond. They wow on their clients.
The white glove treatment.
Exactly. Yeah.
So I know you're talking about kind of, going all in, giving that level of service, giving that white glove treatment per se. And then obviously you have in your own shop, you have I would say, wider selection and different programs that people can kind of get into. A lot of press right now that we see, especially on the real estate side, is everybody's pitching a 2-1 buy down. I don't think a lot of people understand exactly how that works. Mm-hmm. So, right now it's got a lot of press. It's to get these low rates, hoping that interest rates come back down, you refinance later. Why don't you share with everybody, who a lot of these realtors were hearing about the 2-1 buy down, or maybe it's a consumer thinking about the product, exactly how it works. Explain all the intricacies of it and exactly what you got to do to qualify.
Sure. Yeah. We're doing actually quite a bit of these. It's called a temporary rate buy down. And the 2-1 buy down is buy down where your interest rate's going to be lower in the first 2 years. And the idea is it's 2% lower in year one and 1% lower in year two compared to the start rate. So for example, let's say best interest rates in the marketplace are about 5.875 today for a well-qualified buyer. A 2-1 buy down would allow them to get, and it's actually a subsidized payment. It's actually not a lower interest rate. Their interest rate would still be that 5.875, but it actually is subsidized to a 3.875 in year one and subsidized to 4.875 in year 2. And the subsidy comes from seller credits typically. Okay, so the seller would actually be part of the seller concessions, and they're put into basically an escrow account with the lender, and they hold these and they subsidize the payment in the first couple of years. And the analogy I kind of use is it front loans the savings. So they're going to get more savings in the first 2 years compared to over the life of the loan. A lot of people are familiar with like a rate buy down. So like if you paid, let's say, a point on an interest rate, you might get your 5.875 down to maybe 5.5%, but that's over the life of the loan. So the savings difference is only going to be marginal. But if you can get that down to the 3.875 with the temporary buy down, you're getting a whole lot more savings. Okay,
Right.
so you're kind of experiencing those savings more in the first couple of years. The idea is that interest rates could come down in the marketplace. Interest rates going from 3s to 7.25 in a 10-month span is pretty quick movement. It's unprecedented.
Yeah.
So there's talk that interest rates could come down. Nobody knows when that is. I don't know when that's going to be. I mean, nobody can predict that. But there's talks, and it kind of seems logical that they would. So maybe there'd be opportunities for these buyers to refinance maybe in year 3 or year 4 when interest rates are lower. So they never actually experience their fully, amortized interest rate payment. So it's great. I mean, it's especially good for a buyer that expects more income potential. So if you have somebody that's like in an industry where they think, year 3, 4, or 5 from now, I might be making quite a bit more money, and they know their payment's going to go up, they might be okay with that. And it is a fixed rate, so it doesn't change over the life of the loan. Again, it's just a subsidized portion of the payment for the first couple of years. So we're doing quite a bit of these. A lot of buyers that I inform about on these, they jump on them. They really like this. The idea is, though, they have to go back and tell their realtor, hey, I want to get some seller concessions because I want to use this towards a rate buy down. So it's something that's not commonplace because, we're not used to seeing these rates, go so high so quickly. But it's a good solution. And by the way, since we're talking about interest rates here too, is interest rates have been coming down over the last 30 days. They did go up, and I would say the high points like October, but since November till now, we're down a full percent. So I averaged 30-year fixed interest rates beginning of November were like 7.25. Now they're right around 6.25. We're a little bit lower than the average lender. We're probably in the upper 5s. So it's a pretty significant downturn. And, this is something that the market kind of predicts could stay because they think the Fed is not going to, maybe offset the marketplace. They're afraid about that. So that'd be good. And that may be a good time because of it.
Absolutely. So a lot of because right now, especially in the greater Tampa market, a lot of new construction, seems like all these builders are advertising that 2-1 because the hesitation for most buyers on the fence is interest rates. They're waiting to come down, they're waiting to kind of see what happens. It becomes the new norm, whatever it might be. I think there's also confusion in the marketplace. You touched on it a little bit, but if we could do a deeper dive, where they think this 2-1 buy down, I've heard people like, you don't want to go with that. That's an adjustable rate mortgage. Now, I know how the adjustable rate mortgages work, but why don't you just real quick, briefly explain the nuance from the 2-1 buy down and how, like you said, it's the rate, you're kind of subsidizing it to have a lower rate the first 2 years, but you're always having that fixed rate. And then on the flip side, how does the ARM work and how do they differ?
Yeah, so an ARM usually gives you like a fixed rate period for a few years of the loan, and then it adjusts. And that adjustment does have caps, but it could go up, and it could go up substantially too as well. So most people that take ARMs are going to only be in that loan for usually the fixed period of the ARM. And then they know they're only going to live in the house for 2, 3, 4 years. Okay.
Right.
But most people don't have a crystal ball. They don't know what their life's going to be like. And sometimes 3, 4 years goes by pretty quick and they're still in their house. So that's why there's a lot of reservation about taking ARMs. But the 2-1 buy down, there's even a 3-2-1 buy down and a 1-1 buy down. There's quite a different buy downs, depending on how much credit they get from the seller. Again, it's a fixed rate for the life of the loan, but just that payment will be subsidized year 1, year 2, or year 3, depending on the buy down. And then it's going to, at the end of the buy down, going to be at that fixed rate for the life of the loan. So they're going to have that fixed payment that they can count on and not have to, be up at night worried about their payment's going to be, in 5 years from now.
Yeah, so it's almost like, I don't want to call it a worst case scenario. I don't think that's the right verbiage, but that's kind of I'm internalizing this. Hey, I'm getting this lower rate, hoping that A, the rates come down, I can refinance into it and keep maybe something slightly higher, if not get it down to what that rate is. Or B, I'm planning to make more money. So as this payment increases over the 2 to 3 year span, I'm not going to have a payment shock. But I look at it as like, this is like the worst case scenario. If I'm comfortable with that payment, take advantage of this, but knowing that it can never be worse than what that fixed rate is.
Correct. Yeah. Usually if you're okay with, the fully amortized fixed payment at the, the end of the temporary buy down, and that's what we sell too. If that person is not comfortable with that payment, they should probably be buying the house.
Mm-hmm.
Okay. But typically they just want, an intro lower payment, whole lot better than I would assume an ARM if somebody's like banking on being there for a long period of time and just maybe hoping to refinance or, worry about that interest rate going up. So definitely different. Definitely. And in some cases, adjustable rate mortgages are not much lower than fixed rates. So that payment savings might not be worth the risk. So we're not doing a lot of ARM loans right now, even though there's talk of it. We don't do quite a bit because there's a lot of apprehension about them too as well. I don't know where interest rates are going to be, 3, 4, 5 years from now. Mm-hmm. So, that's that always in the back of your mind if you do take an ARM out.
Yeah, okay. Yeah, 100%. So like basically with the market right now and kind of what you're seeing, you kind of went over like what you're doing, kind of hedging down with the customer service. With the interest rates, I think a lot of it comes from educating too. One thing that your organization does a great job is not only educating consumers, but also agents and helping understand all the intricacies of getting the loan, what it takes, and things of that nature. When it comes to the spike in interest rate in such a short period of time, I mean, yes, common sense tells you, hey, you're 3 or 4% higher than what it was. But what most, I don't think, take into consideration, understand, is how drastically those sharp turn rates impact what I call the buying power. Like how much of an impact it has on the buyer's payment. So you're kind of, we'll hear it a little bit on our side on the real estate transaction, but you're really in the trenches with these buyers going over these payments. What are some of the things you're doing to kind of educate them, and what is some of the feedback so that way as agents, we understand kind of what you're dealing with and how impacted their payments are and why there's so much hesitation with buyers right now?
Yeah, good question. So what we do on the front end is find out what their budget is. I mean, typically people are budgeting based on payment, not on price. You kind of think, as a buyer, hey, I think I could probably afford a $400,000 house, but you might not know with taxes, insurance, and HOAs what that payment truly is going to be. So ask them, we find out what that payment budget is, and maybe if they're not sure, ask them what they're paying in rent and kind of see, hey, are you comfortable with that rent? Can you go up if you found the right house? Could you afford a higher budget? So you got to really, make sure that they know their budget first. And then we try to help them correlate that into a price. Okay, so you should stay within this price point to keep you within your budget. However, we tell them what their maximum amount would be. So if they qualify for quite a bit more, because sometimes, buyers, when they get out in the marketplace, they might have this realization or understanding that they could buy a house for a certain payment, and it turns out to be quite a bit more. So it's kind of a little bit of a learning thing for them. Sticker shock, exactly. So, they basically have that high end of what they could go and then their budget, and they can decide if they want to go above that budget. But, if they know that on the front end, and, if I ask them if you have a few houses that you've been looking at, because that's where most people start their search, is usually online. I've been seeing a couple homes in the areas they want to buy. I run payments for them, and then they have a better idea. And sometimes they're okay with that. Sometimes, they are kind of getting a sticker shock, and then I kind of coach them on, well, maybe you can look at, maybe lower price points, or maybe change where you want to buy. Or possibly,
things, taxes, COD, flood zones.
Those things do, have a big impact on an overall payment, and that's one thing that there's a lot of online tools that you can get nowadays. But we kind of have the old school mentality is like, hey, if you really find a house that you like, send it our way. We'll run the estimate. We'll get you a really firm payment. I'll get that to you within 30 minutes to an hour at the most, so they have a better idea. So those are things that we do. So really, it's about budget and understanding payment and setting them up correctly. So when they go in the marketplace, they're successful and they have, good understanding.
Another thing too, I know we're seeing it a lot is, and I think, most agents and aren't aware of the impact it has for their past clientele, buyers and sellers. Where there's a lot of people who are thinking about selling, possibly buying. Most of the time they're going to upgrade, right? Unless you're kind of really teetering retirement or you had a change in income where you're not making as much, it's rare that somebody's going to downsize. So usually it's a more significant purchase. But I know we've had conversations lately on even people looking to downsize, like sell a house at a higher price, buy a lower price home. When you're running the numbers with today's rates, it ends up where sometimes their payments even come in a little higher. So that's putting a lot of people on the fence or on the, I guess, back burner per se.
It is. It can. I mean, again, it comes down to giving them proper expectations on the front end. Sometimes when somebody's selling, they have an idea that, hey, I'm going to put 20% down on the house that I'm going to buy, and maybe they're walking away with well more than 20%. So they can take a little bit more of their equity, put it towards a down payment to keep that payment down. I mean, chances are, because house values are up, that they're going to sell their house for quite a bit more than what they thought. If they bought the house 7-8 years ago, they sometimes are shocked that their home value is high as it is. So, maybe putting a little bit more money down helps offset that too. I mean, because if you walk away with an extra $100,000 that you didn't think you had, it's always good to maybe put that towards the next house and offset the brunt of it. And that's something that again just comes with like kind of running the numbers. So again, buyers should be really talking to their loan officer, having them run numbers, give them proper expectation, not just going through the pre-approval process, but kind of educating them on that too as well.
Yeah, awesome, man. So, a lot of agents kind of get into the business. They're newly licensed, or maybe they've been licensed a little bit. They haven't created the right partnerships. One thing I always try to coach our agents on here is, find, later on when you get into listings and more the sales side, find a good title company to partner with. You'll want one out the gate, but usually when you're a new agent, you're going to start off on the buying side. So it's really important to find a good insurance company, find a good lender to partner with. So for agents out there who haven't kind of found that partnership, what are some of the advantages with partnering for the right lender from the consumer aspect for gaining more trust with their clientele? And what are some things that realtors should look for when they are partnering with a mortgage lender?
Yeah, I mean, experience is something that's hard to overlook, and somebody that is going to be customer focused, but also a good communicator too as well. I mean, all these things that we're talking about here is have to be related back to the agent too as well, so they know what they're looking for their client. I'm sure every agent has probably had deals that have gone awry, and they clearly know what maybe a bad loan officer looks like. I think too many times, real estate agents, they sometimes will say, all these loan officers, they all kind of look the same, until you kind of work with them and you experience it. Like, okay, it's not. It's there's level of service and expertise come into play. Because if I'm going to refer my client over to a loan officer, I want to make sure they're, number one, taken care of. Number two, that they're going to get closed and going to get closed on time too as well. I mean, these are things that just have to happen in this business, but are expected to as well. So I would say those type of things, and it's a partnership. It really is. I mean, realtors and lenders, it's something that it takes time to, have a good relationship, but just like anything else, if you're working in business with somebody, you want to make sure that, hey, we all have the same goal, and that's to get the client closed. And, we want to get the client closed and have them, really have a great process in the whole time too as well. So that's something that we all have a shared goal.
Yeah, absolutely. And I think one thing where I think agents might be duped a little bit or taken for granted, whatever you want to call it, is sometimes they'll partner with the lender because they think a lender is giving great service. And by great service, they're thinking they're quick to give them pre-approval letters. Like, I can get a pre-approval letter in 5 seconds, or I don't even have to call. I get a brief scenario and get a pre-approval letter. And I think a lot of lenders, and then they find out what you were saying is through experience, then they'll start to learn which lenders are good or not. And it's great if somebody can truly pre-approve a client and then the realtor go out, put them under contract, and the transaction closes. But a lot of the times where I find out these people who are producing the pre-approval letters too quick per se, or for instance, there's websites where a client can go to and produce their own pre-approval letter, and agents are out working and showing around, putting them under contract, and then come to find out that the transaction they necessarily shouldn't have been qualified.
Yeah.
Why don't you talk a little bit about that, kind of what you see on your end, and why is it so important to have a true pre-approval, even though it might take a little time than getting something within seconds?
Yeah, I mean it's a balancing act because if you're a buyer's agent and you get a buyer and they say they're hot and heavy and want to submit an offer on a house like right away, last thing you want to do is wait. You don't want to miss out on that property or the client. So you don't want to. And if they're not pre-approved, you want to make sure that happens quickly. And we understand that. I mean, it's the society we're in right now. It's a now society.
Yeah.
Okay, so
Instant gratification.
But instant gratification, yeah, exactly. But there are so many nuances that can create headaches throughout a transaction that if we're not dotting I's or crossing our T's on the front end, could come to be big issues on the back end or delayed closings or truly not qualified. Not get them to closing table. I'm sure you see a lot of listings sometimes that says back on the market because financing fell through. So that's something that it can take time. You get self-employed borrowers that we're looking at tax returns, and sometimes clients don't have their tax returns available. Handily, they have to reach out to their accountant too as well. So that could take 24 hours or even longer. And there's a lot of automation in this business too as well. I mean, for the good. I mean, it does speed things along. We can get verification of employments from employer almost instantaneously with like 80% of the employers out there. That's all good stuff. So we can get the information we need. But even so, we have to verify assets and things like that. So you got to use technology as a tool to help your business, but you can't use it as a crutch. And I think that's where you see a lot of loan officers falling in the cracks here. Is like, they're using it, hey, fill out my online app and then we'll just run it through the automated system here and you got your pre-approval letter. Meanwhile, there's all this information that they didn't get. And then that becomes a big problem. And, all of a sudden they're saying, well, we didn't have that. We didn't know this. We didn't know that. And that's never a good thing. So that really comes with experience, a little bit of balancing act between using the technology, asking the right questions, getting the information you need, and knowing that, everybody wants their pre-approval quickly too as well. So it's something that, it takes a little bit of experience, but it can be done effectively. And if agents are working with loan officers that are so automated, they'll realize that, they might have more fallout, than ones that are old school too as well. And maybe they're just too slow. So you have to have a little bit of a hybrid mode. Yeah, find a balance between those two. And we feel like that's the best model that works because it is, some scenarios are complicated. Some clients have a lot of things moving on, multiple properties, and businesses and things like that. And the more complicated it is, the longer it usually takes for us to confirm it's good. And, I'd rather have my agents wait an extra couple days. So if that house doesn't work, if it doesn't get accepted and they're putting them in their car or they're showing them properties, that they're not spinning their wheels, that, they make sure that they're, if they find a property for that buyer, that, it's going to close and they're going to get paid, and that's something very important. Nobody wants to, waste their time and their effort and their energy. They want to work with qualified buyers. So that's the biggest thing. And, it comes with training. And again, all of our loan officers, we constantly work with them and trying to find that balance to be successful too as well. And, we are a broker business, but a lot of our wholesale lenders have all the technology in the world. So even though we're a small shop, we can piggyback on the technology of some of the biggest lenders in the country. Actually, we work with one of them, United Wholesale Mortgage, just as of last month, became the largest lender in the country. And they're very tech oriented. But again, it's that balance of communication and also using technology to get it expedited.
Yeah, I mean, and I always tell the agents here as well, you want to find a loan officer using technology, not technology using a loan officer.
Correct. Yes. Yes.
See a lot of that nowadays.
Yeah. I mean, obviously innovators like Rocket Mortgage kind of created the click a button, getting a mortgage kind of stuff. But if you really, got truth serum in some of the Rocket Mortgage executives, they say, well, it's kind of marketing. It's like, hey, it gets them in, but then we got to still figure out if it's a deal or not a deal. I mean, with all the technology, it doesn't solve all the problems. It's a tool, but it's not. It's not end all. I mean, obviously, if that's the case, I wouldn't be standing here. They just automate me and make me, just go ahead and do automated pre-approvals and save a lot of money, and you don't need loan officers whatsoever. But there's definitely a need for it.
Yeah, absolutely. Well, it's a good thing they don't. So that way, there's still a need for you, and you do a great job with the loans and then servicing our clientele and all the realtors here. And for anybody out there, maybe it's a realtor looking to partner with a loan officer, you can service all of Florida.
All of Florida, yeah. We're only licensed in the state of Florida.
Okay, so any realtor maybe looking to partner with a loan officer in the state of Florida, or any consumer that's in the market looking to buy or wants to talk to you about some of the different loan products, get pre-approved, maybe get a second opinion, take advantage of your free appraisal that you're running until the end of the year. What's the best contact information? What's the best way for them to get a hold of you? And we'll post it on our social sites as well.
Yeah, I mean, call us direct. I mean, I can call my office line, 813-920-7916. You can call me personally. That's 727-692-1707. But we're always accessible and hands-on. So yeah, anytime. And I want to bring up one thing too, as well as, in this marketplace with interest rates higher, it's always best for buyers to shop. And, you wouldn't think loan officers would advocate that, but, we're confident in our terms that we want clients to talk to a couple lenders. So, I mean, if, they're under contract or they're, considering buying, make sure you're getting the best deal out there and, talk to a couple lenders, get a couple estimates. That's something that's kind of gotten away from over the last couple of years, but you can save thousands of dollars up front.
Yeah.
Quite a bit on the interest rate too, as well. So even realtors too, if they have a preferred lender that they like, and it's always good to say, hey, shop it around a little bit. I mean, this is somebody that they're valuing your referral, and they want to make sure they're getting a good deal.
Absolutely.
And if they know they are, that'll come back a lot better for the agent too, as well.
100%. Well, we greatly appreciate you being a guest on
Thanks
the
for
Real
having me.
Estate Playbook, and then we greatly appreciate everyone for kind of tuning in to this week's episode, and look to catch up with you next week. Take care.